Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, September 20th. Okay, well, we're going to come into some risk events here. The Bank of Japan is meeting tonight, so we'll get their decision on interest rates and stimulus and what kind of a package they're going to put out to the market, if at all any. And we should get that early morning tomorrow. And of course, two-day Fed meeting starts today, and we should get their rate decision tomorrow at 2 o'clock Eastern time here in the United States on Wednesday. So two back-to-back days that we are going to have a major risk event. The dollar will definitely be moving, as well as equities and, of course, volatility. So volatility creates opportunity, and that's what we're looking for since we've been pretty much stagnant for about 2.5 months from July, August, and pretty much most of September up until that Friday, that down day on Friday that we had 2 weeks ago. So that being said, we want to pay attention to a couple of key things. I suspect the yen is going to explode higher and the dollar is going to sell off. Now, that does not mean that it's going to sell off and continue to sell off. When you have risk aversion, the dollar actually shines, and it's that safe haven trade again, as well as gold. But gold is pulling back a little bit. I'll show you the GDX chart today. No indicators, nothing really happened. We did gap up, and then we kind of sold off to a flat line yesterday. So, boy, I'll tell you, something's got to give here. We got to really get this market moving because it's been quite boring of late. So let's get right into it. We have the dollar here. Nice symmetrical triangle here, looking for a breakout or breakdown in either direction. Okay, and of course, if the dollar does break to the upside, it's going to put pressure on the commodity sector, as well as equities if it continues. If it takes out this local swing high I've been mentioning for, I'd say about a good 4 to 5 weeks, then I think we're going to test this high and then ultimately this high here. Okay, but UUP, keep an eye on it. It's the dollar ETF. Next is going to be GDX. And GDX here looking quite weak, and it's normal for a pullback. You want to pull back, and I do think that GDX is coming into and GLD, gold in itself is coming into a second stage bull run, but not until we pull back a little bit more substantially. I like to see that 38% retracement come in right around here, and that's off this low from way back when in January of 2016. So I'd like to see a big flush in GDX and GLD for that matter. That usually does take place in gold, especially gold, where it shakes out all the weak hands. Okay, so GDX, I'm looking for a target of 2367. There is some big resistance up here at the 2468 in GDX. Okay, let's go right to the spiders. You can see we have a big pennant, if you want to call it a bear flag. I like to see this as a real pennant. And again, it's going to need to break out or break down either way. So right now we're getting closer into the apex. So 212.50 is going to be the key. And that's that area that I'm looking for from that Monday's low, last Monday's low right here. 212.50, guys, is what we're looking for, okay? Next target would be that 210. I'm looking for a 210 print if we start to pull back. If we start to explode higher, obviously, then we're going to be looking to challenge the highs here right now. So at the moment, we have a nice pennant formation. All of our RSI and our MACDs are rolling over. We're making lower lows and lower highs. It just looks inevitable for the bigger move to be the downside instead of the upside. But again, news does trump the charts. Next is going to be the 60-minute. And the 60-minute has more of a descending triangle formation. You can see that here of lower lows and lower highs. And, of course, our RSI and our MACD really isn't doing quite too well. You can see here we did come up, and now we're starting to roll over again. So price really is not doing too much of anything but making lower lows and lower highs. Now we're up in the pre-market here, so let's see what happens today. Transports. This is something that I'm really watching here. Really important because when you have the transports really not doing much of anything and just basically clinging on to that 200-day moving average. And as you know, I've mentioned many times, our fund managers kind of keep an eye on the 200-day. And if it starts to lose that 200 and really start to sell off, I really suspect that the portfolio managers, fund managers are going to really take notice and make adjustments in their portfolio. All right, Russell 2000, IWM ETF. Looks like we're just bear flagging here. You could see that clearly into this bearish rise and wedge formation, but is definitely stronger of the other four indices that we follow. So keeping an eye on this low here at let's call it 120. Okay, and then of course the high here at 125.44. So we've got a $5 range, trading range in the IWM. And last is going to be the Qs. Now Apple sold off yesterday, and obviously it affects the Qs and the Dow Jones and a lot of other ETFs that Apple is in, and its suppliers as well. So let's see what happens, guys, today. If we start to lose the yesterday's low in the QQQ. All right, guys. Have a great day. We'll see you tomorrow. Don't forget, you might want to lighten up the book, only because we have the Bank of Japan tonight, going into tomorrow morning's their rate decision, and of course the FOMC rate decision for tomorrow. Have a great day, everybody.